This is a really interesting company. We got an interesting call from a representative or a shareholder of this company saying that they would love us to interview. And of course, we don't just interview public companies here. We interview everybody from authors and celebrities and athletes and athletes and so on and so forth. However, this is a really, really interesting company. And if I'm reading it correctly, I think this is one of those companies that's a disruptor and that kind of moves the needle in a number of areas. The CEO's name is Paul Davis. They are publicly traded. The name of the company is Adeia, and of course their stock symbol ADEA, igniting to innovation, shaping the future of technology and entertainment. And here he is. This is how important we are. We got the CEO. Paul, good to see you, man. How are you?
Great to see you as well.
Hey, so give us an overview, because I think you are the only pure play IP licensing company as a guy that's in the entertainment business as well. But maybe I'm reading that wrong. But I think that you have created a new category here. And I think that once people figure that out, your revenues are going to go into the billions versus the half a billion.
I love that. Yeah, we are one of two, I would say, of pure play IP licensing companies in the public space. But we're the only ones that really focus on what I'd say is what is often referred to as implementation patents. We're a technology company. We invent almost our entire patent portfolio that we have today in two spaces, in media and in semiconductors. Which you might go, why those two? Those are kind of.
Well, I mean, because it gives you 12,000 plus patents.
Yeah, actually, we're almost 14,000.
Are you
now.
really? Okay.
Yeah, but we're seeing a convergence between semiconductor and media now. When you think about hyperscalers, for example, they all have a media component to their business, and they have a semiconductor component as well. Google, Amazon, Microsoft are semiconductor companies. Amazon came out just a couple weeks ago talking about how their semiconductor business, if it was standalone, would be a $50 billion business on its own. Wow. Right. So they're all converging, right, in terms of both being semiconductors is one of the hottest markets we've ever seen before, and they all have a media component as well. So we've been inventing in both spaces.
What's interesting for me is, don't you think that the message is muted a little bit in your space, where if more people understood the opportunity in digging in just below the headlines with companies like yours, that this would be a different investment category than just another stock? And I'm not suggesting you're just another stock, but you know what I'm talking about here. It's a stock symbol at this point as opposed to a category. Yeah. I think you guys are a category, in my opinion.
Yeah, I think so. I think it's a great point. What we're seeing too is people are picking up on our story. We separated from another company. We're part of a product company before called Xperi. We separated in 2022 in October. And so our story is still relatively new and people are picking up on it. But the first day we traded at just shy of $7. We're now close to $30 in our stock price. So we have quadrupled our stock price in under 4 years.
Yet I believe you're still undervalued by 60%.
I think we are.
I mean, because I think there's a disconnect between the story and the market cap here. And of course, we don't talk about stock price on this program. There's a million reasons for it. Most of it is abusive short selling and algorithmic trading and the garbage that you can't control. But what's really exciting here for you guys is the fact that you're touching on, as you mentioned, multiple sort of industries here. But if you just think in terms of the hybrid bonding thing, that's copper to copper. You realize, copper, silver, tin, right? The solder, right?
Yep.
Are at an inflection point in the world because of semiconductors and AI. And you guys are right in the middle. I don't think that can be stated. It needs to be stated loudly every single day so people understand that, don't you think?
Yeah, I mean, hybrid bonding, it's something we started investing in 2015. We bought a company out of North Carolina, but we didn't just buy the company. We started really investing in an area that we thought it could be a platform technology across the entire semiconductor industry, and we're starting to see that now pick up tremendous steam. In the logic market, the likes of AMD have been using hybrid bonding with their chiplet architecture for some time now, since around 2022. We just got a deal done with them earlier this year that was really an incredible proof point for us in this space. But really, the rest of the industry is going there as well. You're seeing the likes of Broadcom, Marvell,
Right.
Intel all talk about it. We believe that NVIDIA will be on their roadmap as well. And then also in memory, which obviously some of the memory companies now are, Micron's now $1 trillion, company. It's pretty remarkable to us watching that space, and it's because memory is so critical for the AI ecosystem today. So we think it's a fundamental technology for memory as well. We're seeing it already in adoption in NAND, and we believe it's coming down the pipe in HBM as well in the next year or two.
Hey, Paul, this is sort of a theme here, explaining things to me on a maybe not a simpler level.
Yeah, but still, I still think, but listen, hold on. Don't undervalue yourself. I still am posting to Instacart versus Instagram.
Right. No, there's just certain topics.
We all have our lanes here.
Because this is kind of a broad, intellectual property licensing is just a little broad and abstract in terms of, it covers a lot of things. So, and you guys help with R&D and a lot of different ways down the funnel. So can you kind of do a simple explanation?
Yeah, it's IP licensing is a way we monetize, but we're still a tech company, right? We still invent. We invent in a different way than a lot of companies do. So we're thinking about solutions that might be, 5 to 10 years down the line versus, a lot of R&D efforts at a product company are more focused on what's the next iteration. Like, how are they going to, make their chip just that much better, or their software version that much better. We're thinking about, like, really, how do we change the industry, right? How do we change the semiconductor industry? How do we change the media industry? And big technology bets that we're making. But we can do that with a relatively small team. We're just over 150 employees. Incredible, operating margins. We're like at 55% plus operating margins.
Yeah, your EBITDA margin. You're 20% growth. You got a deleveraged balance sheet, and Wall Street continues moving your target up. It's really a fascinating story. What are you looking most forward to yourself in the next, let's say, 18 months? Let's say, give me this: the rest of the year, 18 months and 5 years. That which you can talk about.
Yeah, what we see right now is really the semiconductor part of our business continuing to grow with the logic opportunities. We just, AMD was our first real big logic opportunity that we got done and signed. But the rest of the logic market is a huge opportunity for us. And then that's in the next, I'd say, in that 18-month time frame. A little further out is the memory opportunities, but not too far past that 18-month time frame that you laid out. So those are huge markets and huge opportunities for us, and I think that's what's driving a lot of excitement today. But on the media side, we're also seeing really tremendous progress. We were known as a pay TV company. That's what we were known. Our legacy goes back to TiVo and Rovi. And we still have a lot of that technology and those inventors and patents that are part of our history. But we're now diversifying in a significant way into OTT and even e-commerce, where we've gotten.
I'll tell you, OTT is our cable companies aren't going to be selling cable channel packages for much longer. They're going to be internet companies, and OTT and streaming, right? That's the future.
Well, we think there's a world for both, right? We believe that pay TV, there's a certain element.
I think terrestrial is going to be there, but let's look at. I'll tell you. Here's something anecdotal. Mary's heard me say this before. We have Emmy Awards as a show. We've been on the air for a long time. We're a huge audience.
Right.
But so Emmy Awards are regional and national. You've got Grammy Awards for music. You got Oscars for movies. But what we have here, we got 4 Webby Awards. And if you're really thinking, and I'm not just bragging here, I'm trying to make a point. The fact that we've turned away our thoughts about what this show is on terrestrial TV, and if you look at the net that the Webby will cover, the entire universe of internet, boy, you couldn't be more accurate when you talk about where this thing's going. There's going to be a world for terrestrial, because look, let's face it, if you have rabbit ears, you get a better signal than actual cable TV. Because, but at the same time, when I look at this thing and I look at all the things we've accomplished in 30 years on this show, I think that the biggest impact is the fact that we're mass communicating now through streaming, and I think that changes everything, don't you think?
Yeah, absolutely. But even pay TV is like there's an element there. So we just did a deal with Google, right? Google
How many
is
people get to say it? Look, if I had a nickel, I've never even heard anybody say that, by the way. That's
yeah. I know. We get to announce. We announced it just a couple of weeks ago. We're really proud of it, and I think we've had a relationship with them that dates back almost 15 years. Google is now, a top, 5, top 3 pay TV provider, right? I mean, they don't release how many subscribers they have, but from all reports, they're in the ballpark, and they're continuing to grow. I think YouTube TV is the best pay TV subscription out there, and people think of that as streaming, but it's also pay TV still. The way it shows up, the way people watch it is very similar to what they used to do, whether it was satellite or cable before. And so that is evolving. And even in the streaming world, things are kind of evolving. There's more desire for consolidation and being able to watch and enjoy the streaming platforms in a consolidated way. And so we think the world's actually going back to looking more like a pay TV subscription. You see what Amazon does with, a lot of their partnerships with the streaming, or even what Charter has done with their bundling offerings with the streaming services. And so, yes, the world's moving that way, but I think pay TV is also evolving in a way that
it has to, right? I mean, it had to. Hey, where are you physically located? The company, by the way?
Yeah, so we're headquartered in San Jose. We're in the heart of Silicon Valley.
There is no excuse for you not to be in studio next time, and for us to spend a whole hour with you if you'll do it.
That would be amazing. I mean, that would be amazing.
I know you're CEO of a public company and all, but still, this is some fascinating stuff, dude.
Yeah, and you guys have roots in San Diego as well.
We are in San Diego. We are based in San Diego. Although
I went to UC San Diego. It's where I met my wife.
I went to UC San Diego thinking I was going to be a med student, and of course that lasted a year.
Yeah. I think everyone goes to UC San Diego. I'm going to be a doctor, and then they realize. So I ended up going to law school. My wife ended up going to law school separate times, but we.
Well, I'm sorry you're struggling so much, because this company really is. Hey, listen, man, we're out of time today, but we want to get you back on there, man. I really appreciate it.
That would be great.
His name is Paul Davis, CEO, Adeia, stock symbol ADEA. Great stuff.